Was the president of Crystal for about 20 years, and he led their India research business. He's currently the CEO of Indices and Data at National Stock Exchange, which is NSE in long form. He's a highly revered professional, in the industry, and with a lot of experience and knowledge, under his sleeve. This is Mr. Mukesh Agarwal of NSE. He'll be helping us today understand some of the role that index providers play in the area of passive investing. We believe that I think when you look at the king of I would say indices in India, it's very clearly Nifty. And to be honest, before even AMC's spent money on education, I think it was NSE, which actually did the hard leg up of I think educating a lot of people on what passive investing is, what index is. So I think kudos to the hard work done by NSE and Mukesh and his team. And now obviously we have a very different market than what we had a few years ago. So over to you, Mukesh. Thank you for being here, and looking forward for your insights.
Thanks, Pratik. Just give me 1 second. Let me share my screen.
Sure.
Yeah. Can you see my screen now? Yeah.
Yes.
Thanks, Pratik, and good evening, my fellow speakers, ladies and gentlemen. Before I move forward, I would like to thank Motilal Oswal AMC for giving me this opportunity to speak at this conclave on passive investing. As Pratik mentioned earlier, we at NSE, we have been very passionate about this subject. We have been putting in a lot of efforts to see how the passive investing as a concept can pick up in India. And today we are very thrilled because the industry has really grown in leaps and bounds. And earlier in the conference, both Naveen and Pratik have spoken about the numbers, the kind of growth we have seen in the industry. Just to recap, I think today the passive industry, the size of the passive industry in terms of INR, it is 4.25 lakh crores or 4.25 trillion Indian rupees. And the breakup of the same is, it is approximately 3.71 lakh crores is the ETFs, and approximately 17,000, that's 3.71 I'm talking about is the debt and equity, and 17,000 crores rupees is the gold ETF, and around 36,500 is the index fund. So that is a broad breakup. And it has been most of the growth in Pratik also spoke about it initially. Most of the growth has happened in the last 5 years. Actually, the growth, if you look at the assets under management in ETFs, was something like 8,000, 9,000 crores at the end of March 2015. Last 5 years, the ETF industry has grown 17 times. So I think that is a stupendous growth. Now, today, the topic for my presentation is role of index providers in passive investing. So if you look at it, I would say that index providers and the mutual funds or the passive fund product manufacturers, we work very closely, because any new index idea to be created, we take feedback from them, we work with them, and then we try to create an index. And whenever we create an index, our main objective is the index should be representative of the market or the theme or the strategy on which the fund manager wants to launch the passive fund. And the second, which is the most important, that the index should be replicable also. No point in my having a stock in an index which the fund manager, which is trying to replicate the index in passive investment, is not able to replicate the index. So I think replicability and representativeness of the index of the market is very important. These are the two key features which we look at while creating the index. So I'll talk more about creation of the index when we move forward. So in my today's talk, I will talk about the variety of indices on which the ETFs and index funds are available in the country, because that has been growing leaps and bounds again. And why I'm saying that, because it is very important for all the investors to know that earlier when the whole thing started, the first ETF was launched on Nifty 50. But today, we as an investor, we have a wide choice and wide range of indices on which the ETFs and index funds are available. So if we have to do our asset allocation strategy, we want to follow thematic investment, we want to do strategy investments, we have the ETFs and index funds available. I will share some of the names with you. So that is the whole idea. Now, just to give you a quick recap, basically, if you look at it today, I have broken up my passive investments, as all of us know, comprises of two things. One is ETFs and second is the index funds. ETFs are traded on the stock exchanges, wherein the index funds you directly buy or sell from the mutual funds. I think that is the key difference. In both, the fund manager doesn't take any active call in buying the portfolio. They just replicate the index. They buy the constituents of the underlying index in the same weightage. Now, coming to ETFs, there are overall 103 ETFs available in the markets. And if you break it up into equity ETFs and debt ETFs, so within equity, we have around 88 ETFs listed and traded on the stock exchanges, and out of which 68 ETFs are linked to 24 Nifty indices, and 16 ETFs are benchmarked to 16 ETFs are benchmarked to 6 indices of Asia Index or BSE indices, and 4 ETFs are benchmarked to 4 global indices. And the total AUM of this 88 equity indices is around 3.16 lakh crores. And out of which 75% is benchmarked to Nifty indices. And within that, if you look at, almost 52% is benchmarked to Nifty 50. So Nifty 50 is the most popular index amongst the investors for the passive investments. And approximately 87,000 is benchmarked to BSE indices, and 6,700 crores is benchmarked to the foreign indices. Now, if you look at the debt ETFs, there are 15 debt ETFs which are listed and traded. And out of the 15, 14 are benchmarked to 11 Nifty indices. One is benchmarked to BSE index. And the total AUM of this 15 debt ETFs is approximately 46,000 crores. And the main ETF in this is Nifty Bharat Bond Index, which was launched in December 2019. I think Prateek did mention about debt indices or debt passive funds becoming popular in India, gaining popularity. Yes, I think after the launch of the Bharat Bond Index, the Bharat Bond ETF in December 19, which tracked the Nifty Bharat Bond Index series, the debt ETFs or index funds are really catching up. And then next is Nifty one-day rate index, which is around 3,800 crores, then Nifty SDL. So I think if you look at the Bharat Bond Index, why they are catching popularity, because if you look at Bharat Bond Index, the way it has been created, it is a target maturity index or target maturity ETF. What I mean by that, it means that the ETF or the index matures on a particular date, just like a FD would mature, a three-year FD or 5-year FD would mature on whatever XYZ date. Similarly, this ETFs and indices also mature on a particular date. So that is one. So what happens? So I think because we believe that this gives 4 key, or this Bharat Bond ETFs or the way the passive funds have been created, these are 4 major advantages. One is the predictability of the cash flows is very high. So what I mean by that is, if you're investing on a particular date, you know what is my yield to maturity. And if you hold on to those ETFs or index funds till maturity, you are likely to get those kind of returns. So you know that what is the amount I'm expected to get and what is the date on which I will get the money. That is one. Second is the credit quality is very high, because all the indices what we have created so far are AAA or SDL, state development loans, or government securities. Second is they are liquid in the sense ETFs at least trade on the stock exchanges. You can buy and sell on the stock exchanges. Similarly, if you have invested in the index funds, you can redeem or buy directly from the mutual funds. And last is they are very tax efficient. So because if you are investing in a like-to-like comparison, if you invest in a bank FD, you have to pay tax at your applicable tax slab rate, wherein if you are buying a debt index fund or a debt ETF, and if you hold more than 3 years, then your tax rates are much lower at 20% after the indexation benefits. Just I wanted to highlight that. So now if you come to, this is an important slide again. Now, what are the top 10 indices in terms of ETF AUM? The top most index is Nifty 50, which has 17 ETFs tracking it, and the assets underlying this 17 ETFs is approximately 1.64 lakh crores. Next is S&P BSE Sensex, which is 79,000 crores. And you would also see that number 8, which is NASDAQ 100. So it's good to see that one foreign index is also gained popularity over here, which has got approximately 5,100 crores of assets. I think Pratik did mention about it. Naveen also mentioned about it. The ETFs or index funds tracking the foreign indices are gaining popularity. They are getting AUM. And second thing is, in top 10, we have one international index and we have two debt indices. One is the Nifty Bharat Bond Index series, which has got an AUM of 36,000 crores. And we have Nifty one-day rate index, which has got 3,800 crores. So that is the thing. So as I mentioned earlier, overall, there are 46 indices in the country on which ETFs are available. But the top 10 indices which are shown over here, they account for 96% of the ETF AUM. And if you look at Nifty 50 alone, Nifty 50 accounts for 45% of the ETF AUM. And the largest debt ETF, as I mentioned earlier, tracks the Bharat Bond Index series. So this was on the ETFs. Now coming to index funds, in India, totally this data, whatever I'm talking about, is as on September 30th, 2021. So we have around 53 index funds, out of which 48 are equity index funds and 5 are debt index funds. And out of this 48 index funds, 41 index funds are benchmarked to 11 indices or 11 Nifty indices, and 5 are benchmarked to BSE indices, and 2 index funds are benchmarked to 2 global indices. Now, if you look at in terms of AUM, approximately 22,500 crores is benchmarked to Nifty indices, 3,000 crores is benchmarked to BSE indices, and 2,300 crores is benchmarked to foreign indices. So overall, in terms of market share, it would be approximately 80% is benchmarked to both equity and debt put together. 80% is benchmarked to Nifty indices. Now coming to debt index funds, within debt index funds, we have 5 index funds totally, out of which 3 are benchmarked to Nifty indices and 2 are benchmarked to CRISIL indices. And the total AUM of these 5 debt index funds is 5,500 crores. Now here also, I just try to project what are the top 10 indices in terms of index funds AUM. Here also Nifty 50 is the topmost, which is 17 funds and with an assets of 15,300 odd crores. Next is Nifty Next 50. Nifty Next 50 is an index which has been gaining popularity. We see a lot of new ETFs and index funds being launched. And while we have 8 index funds over here, we have 7 ETFs tracking Nifty 50. So here also we have one international index, which is S&P 500. Tim also talked about, Pratik talked about it. So there is one index fund which is tracking S&P 500 and which has got garnered assets of around 2,100 and odd crores. So in index funds also, the top 10 indices account for approximately 92% of the AUM. And here also the story remains the same. Nifty 50 accounts for 47% of the AUM. Now this slide, I just quickly want to share how the number of indices on which ETFs and index funds are available in the country has been growing. So if you look at December end 2016, we had 48 ETFs available in the country and they were tracking 20 indices. Now, same thing if you look at as on September end 2021, so we have 103 ETFs tracking 46 indices. So over the last 5 years, almost 5 years, ETFs have been launched on approximately 26 new indices. And I will share some names with you as we move forward. Now coming to index funds as an end of 2016, we had 20 index funds tracking only 4 indices. Now same number if you look at as at end of September 2021, we have 53 index funds tracking 19 indices. So the fund managers, the AMCs are looking at launching ETFs and index funds on different indices, trying to give more options to the investors so that it can meet their investment requirement. This slide just talks about what are the indices on the ETFs that have been launched in the last 3 years or last 2.5 years. So if you look at in the current financial year, which is April 21-22, starting from, FY 21-22, starting from April till September end, approximately 11 ETFs have been launched on 9 indices. Just imagine 11 ETFs on 9 different indices. So these indices are Nifty Consumption. So we have Nifty Consumption, Nifty Healthcare, Nifty Pharma. So we have this S&P 500, then NYSE FANG Plus, then Nifty AAA Bond Plus SDL. This is a debt ETF, Nifty FMCG, Nifty Financial Services, Nifty 5-year benchmark GSEC index. Again, this was again launched by Motilal, and even S&P 500 has been launched by Motilal. So similarly, if you look at last year in 2021, entire financial year, April to March, 16 ETFs were launched, and those are on 10 indices. So, and year before that, 11 ETFs were launched. So the number of ETFs being launched is also increasing, because this year, while the slide shows 11, but another 3 have been launched in October. So already 14 ETFs have been launched in the current financial year. So not only new ETFs are being launched, but also they are being launched on different kinds of indices. The story remains the same for index funds also. If you look at index funds in the current year, 9 index funds have been launched, and this 9 index funds have been launched on 7 different indices. And if you look at the last financial year, 10 index funds were launched, and all 10 index funds were launched on 10 different indices, which is again very heartening to see. And year before that, 9 index funds were launched. So this is showing that, and this year, like till September were 9, and in the month of October, we saw 4 index funds to be launched. So this year we have already seen 13 index funds being launched in the first 7 months, as against 10 index funds being launched in the entire financial year. Now, this slide just tries to show you that at NSE indices, we have 85 equity indices available in the market. We have the indices available in broad market category, which are representing different segments of the market, like Nifty 50, Nifty 100 is large cap. We have mid cap, we have 3 mid cap 50, mid cap 100, mid cap 150. Then we also have small cap 50, 100, 250. Then we have various sectoral indices. We have Nifty Auto, Nifty Bank, Nifty Financial Services. Financial Services is an index which Nifty Bank includes only banks, but Financial Services as an index includes banks, plus other financial services entities like housing finance companies, NBFCs, mutual funds, insurance companies. It gives a wider exposure to the segment. And we also have an index, we have also an ETF tracking this index. So next is thematic indices. We have 22. You have ESG indices over here, Nifty CPSC, Nifty Infrastructure, Services Sector, Consumption Theme, India Manufacturing. Then we also have strategy. Strategy, again, we have quality, value, then we have momentum, we have dividend. So you name it, and we have the index available. And good thing is, even if in strategy, if you look at, we have Nifty 50 equal weight on which ETF is available. We have Nifty 100 quality 30 on which ETF is available. Nifty dividend opportunities 50 on which ETF is available. Nifty 100 equal weight on which index funds or ETFs are available. Similarly, you have thematic indices on which index funds and ETFs are available. Similarly, in broad category, you have now, basically we have 3 broad categories: large cap, mid cap, and small cap. So you have index funds and ETFs available in all the 3 categories. In fact, Pratik was the first one who came and talked to us and said he wants to launch a index fund on Nifty 500. He launched an entire basket: small cap, mid cap, and Nifty 500. I think he wanted to be different. He wanted to make a different offering to his customers, and he did that. Now, similarly, in the fixed income indices, we have 87 indices. I will not get more into details, but just the message we want to give over here is we have indices on different asset classes. Asset classes, I mean by corporate bonds, government securities or GSECs, then SDLs, trade development loans. We have on commercial papers, we have T-bills, treasury bills, certificate of deposits. And then here we also have fixed income aggregate indices, which is liquid, money market, ultra short, and then long duration, composite. So in this, if you look at it, we have ETFs or index funds available on Nifty 5-year benchmark GSEC, Nifty 10-year benchmark GSEC. And the next slide talks about the target maturity. Target maturity, we have 13 indices. And on each one of them, we have an index fund or ETF which is available in the market. And we are continuously working on various different kinds of debt indices on which various mutual funds are looking at launching ETFs or index funds. Now, coming to index governance. Sorry, I'm running behind my schedule. So index governance, the comfort I want to give is the professional team at NSE Indices manages the construction and maintenance of indices under the close supervision and guidance of various index committees. We have 3 index committees. One is we have Equity Advisory Committee, we have Debt Advisory Committee, and they provide guidance on the macro issues related to equity and debt indices. Then we have index maintenance subcommittee for equity, one for debt, and they look at, and they are that committee is responsible for index methodology, and they also approve the changes to the stock selection criteria and also what goes in and what goes out from the index. And last, we have index oversight committee, which provides oversight to the administration of the indices, which being run by the NSE Indices. Now, other thing which I want to give a comfort or mention over here is the criteria governing all Nifty indices, and typically that is followed by all the index companies globally, are publicly available in the methodology document, which is published on our NSE website and Nifty Indices website. The methodology is so transparent, I would say, that like people know that Nifty 50 or other indices go through a churn, or we do the rebalancing. We announce the rebalancing sometime in February and second rebalancing in August. So well before our announcement, there are, I would say, brokerages or sell side who start predicting or guessing what will go out and what will come in. So I think such is the transparency of the methodology we have available in the market. Now, compliances, coming to compliances. So basically we have ISCO principles for benchmarks, basically, which are available, prescribed by ISCO. Basically, the principles prescribes the expected level of industry best practices with an aim to bring transparency in benchmark determination process. So our Nifty indices are fully compliant with the ISCO principles, and we have also voluntarily decided to get an assessment done through an independent party. So Deloitte did it for us in 2016 and 2018, and EY did it for us in 2020. And this assessment reports are also available on our website. Now, there is a new requirement by European Union benchmark regulations have been published. We have UK benchmark regulations, basically for any index provider to offer indices in European Union. Our indices have to seek compliance through one of the options, which is equivalence, recognition, endorsement. So we are working on this, getting the compliance done by both UK benchmark regulators and EU benchmark regulators. And we expect our compliance process to be completed by December 2022, because this has to be, as per the regulation, this has to be completed by 1st January 2025. So, but we want to do it but much before the time. Now, what are the new themes which we are working on? I think these are very, very exciting days, because we talk to so many different mutual funds and AMCs, and each one wants to launch an index fund or ETF on different theme. So we are working on very exciting themes. I would say we are working on defense, we are working on mobility, we are working on ESG. ESG, we already have 3 indices on which, in fact, all the active funds on ESG available in the country are benchmarked to our ESG indices. We also have an ESG ETF available in the market tracking our indices, but we are working on different concepts. We are working on non-cyclical consumption, and we are working on target maturity GSECs. We are working on housing theme. We are working on target maturity SDL. We are working on green. We are working on digital theme. We are working on GSEC for FPIs. In fact, this index we have already launched, and one of the AMCs has launched a product for FPIs in the international market. And we are also working on index on low carbon emissions. So what the message I want to give over here is, we are working on different themes, and for investors, they will have a full bouquet of index funds or ETFs available on different kinds of index, depending on their asset allocation portfolio or asset allocation strategy. They can choose which index funds and which ETFs they want to invest in. So before I end, this is one of my favorite quotes by John Bogle. All of us know that John Bogle is the father of passive investing. He's the one who created this whole index funds. Where returns are concerned, time is your friend, but when costs are concerned, time is your enemy. I think we need to keep this in mind while taking our investment decision. Thank you very much.
Great. Thank you so much, Mukesh sir. A lot of insights, and we got to know a lot of future products that are coming in, from NSE. So due to the paucity of time, I just we had space for one question, which came from an audience member, who's actually confused. I think if you look at this state about 2 years ago, we had limited options when it comes to investors wanting to invest in index funds and ETFs. But today, I think the opposite has happened, where you have so many ETFs, so many index funds. I think they're close to 20 to 20 plus Nifty 50 index funds. So do you, as a index provider, as NSE, concerned about the number of funds, similar funds in the market, and about how the education for these funds happen through these multiple AMCs?
See, basically, to be honest, we as an index provider will not be worried about if more index funds are being launched, because see, today, if you look at it, Nifty 50 is the benchmark index of India. So no AMC would like to not have an index funds or ETF tracking Nifty 50. So today we have 17 ETFs tracking Nifty 50. We have 17 index funds tracking Nifty 50. So there will be more, might be coming. So I think for an investors, they have to look at the selection criteria. There are different selection criteria for choosing which index funds or ETFs to choose among the 17 index funds or 17 ETFs available. I think the topmost criteria is the tracking error. They have to look at what is the index fund or the ETF which has got the least tracking error. And second, I would say, is the cost factor, because the expense ratios which the fund houses charge. So I think that is the one which they should look at. And third one is, if you're doing it ETFs, I think ETFs one is to look at the liquidity. What is the impact cost and what is the liquidity in terms of which we get to see from the bid and ask spread of the ETFs traded on the stock exchange. And based on this, they should decide which one to choose. So I don't think there's any question of confusion. More is there, but good thing is everyone says it's Nifty 50. So everyone knows that this index funds or ETF is investing in the Nifty 50 stocks which are part of Nifty 50. So that's from this idea.
Great. Thank you so much, sir. Thank you for your time, and we obviously look forward to having more sessions as these in the future. So, ladies and gentlemen, that was Mr. Mukesh Agarwal, CEO of Indices and Data at NSE, and thank you so much for your time.
Thank you very much. Thank you, everyone. Bye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.